Hello, traders. It's E from MarketWizards.com. About 20 minutes of 11 on the 19th of November, 2022. Reminding traders to use risk capital you can afford to lose. All right, let's get to the charts and take a look. This is a weekly chart and a lot of information contained here. And that's part of our business, is to understand how to make decisions with incomplete information. And typically I like to look at a variety of charts. And then when the game gets started, when the play begins, you have to be more or less loose and relaxed and just try to understand the game rather than do tons of analysis in the heat of the moment. That's the hard part. You need the preparation so that you're ready to act and react. We saw the spike high on Tuesday, a pull back. And then obviously it's options X week. So there are a number of things that I'm looking at on a chart like this. One of them is the prior week's high. We lost that, and these are ideas where I keep in front of me so that in one quick glance I can remember those ideas. You need this bigger perspective. It's not just about the minutia. And we had a target on Thursday. We got to it, did a little overextension, but I thought that was time for the bounce. And probably in all honesty, the biggest surprise to me on Friday was we had gotten the third time through, but we couldn't really get above and hold it here. And this was the overnight trade. And we know with options X, anything can happen. And so I was looking at a couple of things, and one of them was to confirm by breaking back under the middle of the weekly range and coming back on this side. And I had an 836 up here as the key pivot, and we'll show that in a minute. And then step by step, when you break a level, you have the right to then challenge the next box. And if we break that, we have the right to go back and check the next. And this is where that 601 support came from on this chart. Just a terrific support into the end of the day. Chop, 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 and then squeeze back in as the weeklies take their profits. Now, for some more context, let's take a look at the 2-day chart, which I always have available. I want to see how one day stacks up with the next, but I also want to see the aggregate, the total of the range, and use that to help make decisions. And here we can see at the beginning of the RTH, where we're higher than this high, but we immediately come back through it. And then this is the half gap and gap trade in all its glory. And you've got to work around some news, obviously. But this was a great trade for anybody that thought maybe we'll migrate back towards the middle, even if you didn't get the whole thing. And note where we stalled in this 2-day chart. Just a perfect example of using the system and saying, well, maybe that's a good spot, that 601 support. Make sure that we get some profits in here. And then we start the gyrations. On this chart, we can see it, where we're making these flat top, but higher lows. And then the end of the day, just the push finally breaks this 72 area, takes out the middle of the 2-day range and comes back up and gets a solid push into the end of the day, and then closes in this box right here. I had a 705 as a magnet and overshot that and came back and closed in that area. Here we are with the predictive levels, and you can't make this stuff up. You either believe in this or you don't. And those of you who just like to look at the dynamic pivots, the ones that keep printing without considering market structure, I think you're missing part of the picture. There's a very important part of the methodology for us, and here's where that 601 comes from. This is already set in stone, and so the market tends to understand that and will use this as a guideline. And here's the 836. This was our opening pivot. It's got to be because that's the nearest one while we're getting ready to open. 875, the big resistance behind it, and we come backwards, and you've got to get through step by step. You've got your gap trades and half cap and so on. Then we bust the middle. They're very important. Once we cross this line, we have the right to then challenge the next. And we get the rotation back. We get some news you've got to work around, obviously, as well. And then we get the dump. Some of us are taking lunch, and if you get back and say, "Oh, we didn't hold in here in that 640 area," but we already know. Well, all right, we know our targets. We know that this should be a support, and if not, then we're going down to 562 and a half. And so they kind of, with options X, they knew about where they wanted to hold at, and just by looking at this chart, we already know that this is going to be, the pipe is going to be a very important range, and that you're going to get perhaps 40% of the day's range inside these two boxes. That's according to theory. All right, let's take a look at a sanitized version, and even so, a very good look at the rhythm. SSB is a sell buy rhythm, and that's pretty much what we had on Friday. And if we're looking at this perspective, we can see a 3-minute Orbo. We break this low, then it opens the door to go to lower lows. This is our angel or demon, the first bar. If you want to use a 1-minute bar, and I know PAX uses 30 seconds, so this would be in addition to his extremely fast opening range. If we go 30 seconds, boom. So back in here, once you're heading this direction, his strategy evidently is to jump in. I'm a little more conservative, because I believe that there's enough time in the day to get something out of it. And I want to see a firm direction established. So you can use a 1 minute and then kind of confirm it by taking out the 3, and then confirm that again by taking out the 15. And you're going to note around news, you're going to get a lot of oscillation anyways, but the direction is the most important thing that we want to get. And this subsequently, when we have other news events, we can see the pattern developing and see that, okay, we've got some targets that perhaps we had considered. And then after we get to the support zone, usually you're going to get a contra of some kind. And if we have all morning and into the lunch period, a draft down, then I'm looking for a bounce. And it may not get all the way back up, but certainly there's going to be some profit taking. And that's where I had posted at the end of the week, position squaring, the last leave loses. But the longs really do need to get it back up above that 666, 672 area. And once they do that, it's off to the races and the squeeze is on. And people that were left here hoping for more really give back a healthy portion of it if they didn't just cut their losses on the way back out. So I love a chart like this because there's so much information on it. And whether you use a 15-minute or a 1-minute or 3, the dynamics are the same. So this is the Orbo trade in all its glory. And for me, the most important thing is, can we get under that 3-minute bar and stay under it? Because once we do, then that tells me that we're going to try to achieve certain targets. And obviously the first and most important is, can we get back here and take out this prior low at the end of the day on Thursday? And that's suspect. You always want to be very careful as you approach these ideas. Those are big ideas, and minor breaks below them is a lot of times you'll get trapped. And I've got this line right here to show kind of a platform where this is like an inverted head and shoulders intraday pattern where that first low where a lot of profits were taken and bounced back. And I had thought at the time perhaps that even the low of the day might be in because it's options X. And significantly, if they held and just chopped here, they could have done this move and even come back up here towards the end of the day. So it's always a game of trying to understand with incomplete information what the true idea is that they're trying to do. And I say that because I do believe that there is an agenda that's often being used. All right. Part of my brag book, grandson George, I watched him play ball the other night, a couple of times this last week, and this kid has worked on his game. He really just loves the game. He's a natural athlete. He always was. And for me, he just personifies the work ethic. And I knew way back when that this kid was going to be a great athlete. Even at 1 year old, I set up a little basket in the house and he was shooting all day long, even at 1 year old. And by 10 years old, I couldn't stay with him anymore. He just was such a good shooter, but he works on it every day. I mean, there are times I went out and played in Greenwich with him when they were living in Greenwich, 30 degrees, 25 degrees, and I'm freezing. And after half an hour, I go back in, and he's still out there another half hour shooting. He just has that dedication and that drive, and that's what we need if we're going to be good at anything. And you have to pay your dues. There are no shortcuts, in my opinion. Ending this video, I'd like to remind everybody that I do believe that you need to play the game at both ends. You need to play offense, but you also need to be able to play defense. And the better we get at keeping those really bad trades out of our system, the better we can hopefully manage this game and continue to play it. There's nothing worse than not being able to play the game because you're leveraged to the hilt and you can't do anything to unwind yourself. So trade small enough that you're not afraid to take that stop loss. And when it happens, just consider that's part of the game. You're going to miss some shots, you're going to make some shots, but the love of the game keeps you in it. And the most important thing is always be in a position to take advantage of opportunities. And when you're wrong, get out and reconsider on the sideline. Take that time out and go to the bench and think about what you want to do next. All right, this is Z from MarketWizard.com. Hope you have a wonderful weekend.